lessons from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down.
Yeah, what's up, man? Y'all, I honestly think it's priced in. That was the bottom. We're gonna be able to do good. It's looking good right now. Thank you, pal. What is this? What's going on? Why is it?
Seriousness, today was one of the worst days in the market, and it wasn't because of Powell. It was because of the consumer. So here we got some money. I'm going to show you an example, but honestly, since the consumers clapped and I don't even got it like that, we're going to be using monopoly money. So let's talk about it. A lot of people think the market dropped only because of Powell, and I do think he had an impact, but the data from Target and what we got from Walmart yesterday, it is not looking good. So let me break down. Watch, let's do some magic. All right, so here it is. Apparently, the average American consumer makes about $5,000 a month. Now, obviously, depends on your job, where you're at. And again, and maybe this will help you understand it a little bit, but you got $1,800 here for rent. Then we got $600 here a month for food. Then you have $800 a month for transportation costs. And then you got $400 a month for healthcare, and then $100 for stream alerts, okay? Not a recommendation, observational risk, okay? Anyways, but you're left with this. So if you have $5,000, you're gonna be left with like about $1,400 left. But now, here is the thing. It's not as if the earnings were bad today, but now the inflation is starting to hit. So let's say your rent is fixed for a year. You may not have to adjust it, but maybe next year, okay, factor that in for the future, another $200, but maybe you could keep it. Who knows? But now food, $600. If that goes up, you end up spending $700. I think average food is about 50% higher, so then that's another $200. Your transportation, you could blame the oil futures, gasoline, whoever you want, Putin, it doesn't matter, but we're gonna throw another $200 on there. And then healthcare, I mean, it really depends on there. I think we could leave it there. And then stream alerts, I think you guys will be good, but pretty much you're left with $700. And this is what you would spend at Target, Walmart, Amazon, whatever it may be. But now the point is the consumer is getting weak. And that's it. The narrative, everybody kept saying the consumer is super duper strong, but today was a weird one. So we got a lot to talk about, Chad. What you saw today, it was literally the worst earnings for Target since 1987. And if you haven't seen Walmart, same exact thing. Worst performance since 1987. But what is happening now, that narrative that the consumer is really strong, it is being tested. So like I said, it's not as if the earnings were bad. Target, they actually still did better year over year, and they still made $23 billion. But the problem with what we saw now, the margins, the cost that it's costing them to get those products, that's going higher. And then now with prices and other things like gas and everything going up, people are starting to say, well, if this continues and the consumer slows down a little bit from here and then prices have to go up anymore, we got a problem. So today it was all about the consumer data, literally consumer discretionaries and consumer staples. They were down about 6-7%. It was 7% at one point, but you got to realize this. The last couple days or the last couple weeks, we have been getting safety out of consumer staples. Those have been the defensive names. So now, finally, everybody got a beating. Everybody got a taste of the volatility, the downside, and now that is what factored in. So yes, Powell said stuff yesterday. We were correct on that assessment, and that factored it in, but that wasn't enough to bring you down 5%. We dropped 4.7 on the NASDAQ, but you see here, even the SPY and Dow, they actually did very bad as well too. So where we go from here now, one, it's going to be about the economic data, anything related to inflation. Again, after showing you the monopoly money, just imagine people are forecasting another dollar increase in gas. This might be the breaking point for the consumer where you start to get some of the negative effects and even demand destruction. But now, too, we have to deal with the level. So here's the point. We are right back to the close or the low levels. Where we closed today is actually the lowest close of the year. So remember a couple days ago, we hit 385, but guess what? We didn't close there. We closed at like 392, 393, but after
today now, this is the lowest close, and I do think, I could be wrong, but I think the market might gap down tomorrow. If it doesn't, I would expect a big sell-off, and honestly, even after hours, CSCO, we got to play on this, but they did abysmal. They guided negative revenue or negative year-over-year revenue for the next quarter. Just imagine that. But pretty much now, it's at the mercy of the market, and people are talking about this. Again, we might get big moves, but they're saying this is the slowest and calmest market crash ever, in the sense that people aren't capitulating. You still got a lot of passive investors holding, and it's creating this weird just wind down and de-risking. So I wish I had news to give you, but for the rest of the week, we're probably not going to get anything. I mean, what tomorrow is going to be dictated upon, it will be all about any news from China or anything that could affect gas or even food and those commodities. But pretty much now, once we set this trend, I said this yesterday, if we went up and things were able to hold that rally, it would have been good, because the lack of news, we could have melted up. But now we may be in store for a little mini meltdown. Now, hopefully, things will change. We'll see what happens with it. But finally, you are watching consumer staples get clapped. Safe havens in tech like Apple and even Tesla, they're even getting clapped too. So depending on where we flush out or how these start to trade from here, I mean, it is going to be very important. But like we said, until we get one of the big credit events or that next real big problem, it's not going to really wind us down too low. Now, the real question is, where do we go from 380? Does it take us down to that 360, 350 level? And then we could start talking about, okay, it's really going to get even worse from here. But as far as today, I gave you the breakdown. Again, it all is about the consumer data, and that was the real big driver today. But you see it, we didn't gap up or anything. It was a gap down, and it just went straight down, and it just, like, every level, it was very weird. It was very slow. And honestly, for a day like today, I think this is probably one of the lowest volume down days for a 5%. So some people are talking about that. They're saying lack of liquidity, and now where the key levels are at for the options and all of that, it could lead to more downside. But today really was slow. The velocity wasn't there. Like I'm saying, it's like a slow, big de-risking. It's very, very weird, but there was literally no news. There wasn't anything. There was even an oil build or oil inventories that got dropped, and that popped oil up for a little bit, but then that even came down with everything. Even ARC, you probably noticed there was a couple names, the non-defensive names held up. They were up. Some of them ended up selling off. Roblox ended up holding. But where we go from here, I think it's just going to all be about investor sentiment and how do we hold these levels. I brought this up a couple of weeks ago when we were talking about it. It may reflect a moment like here that we saw early on, or we could get something like this where the next few days, again, if there's not going to be any news, it might do this little back and forth, and then we'll just be very sensitive to what comes across the wire. But if we do start to sell off and we start to break any of the lows and even close there, I mean, just all eyes are on 360 and 350. And a lot of people are asking, is this the bottom? Is this what it is? I mean, it's too early to tell. Anytime we've ever sold off, most like bottoms, they haven't lasted this long for 5 months. Again, and now with the consumer slowing down, or at least people worried about it, again, that's the whole key. It was the guidance with Target, the guidance with Walmart, and people starting to add 2 and 2 together. They're saying, wait a minute, it's about the future. It's not necessarily right now. My camera died, so I had to switch here to get it to you in time. I'm sorry, Chad, but like I'm saying, the point is, everyone's looking for the future. If you're trying to find a market bottom right now, the point is, in the next couple of months, we are probably going to deal with something else. So I answered this one today. If you are trying to time the bottom, it's best if you go little by little. A couple of nibbles here and there at these lows, that will do a lot for you and get you a good average price than trying to say, all right, this is the bottom, let me go all in on it. So today was very simple. It boils down to the consumer. And yes, Powell was a part of it, but we brought this one up today and it just makes the most sense. This consumer data and the consumer kind of slowing down, or at least the margin pressures rising this much, that was not priced in. Even then, the market hasn't fully reacted to where the Fed futures are pricing with rates. We've talked about that a lot. And again, it is still important, but the one thing today that happened, nobody was really pricing that in for the consumer. And like I said, it's not bad right now, but it's starting to paint a very, very grim outlook for the future. So now that we got that out of the way, let us get into the plays. I miss being able to do that on the microphone, man. But as far as the plays, we made a couple today. If you remember that Apple, we grabbed it yesterday during Powell's speech. I said it had a slight hawkish tilt. We got that one, sold out of it. That was good. Even our NASDAQ future, that one ended up coming up. But now with what we saw today, I mean, I would be focusing on every single consumer stock. You got Costco earnings coming up. They got clapped. Even Ulta, they got clapped. But pretty much this consumer fear, it spread to every single one of them. So I will be watching a lot of those. And what I'm trying to say here, you might get multiple day continuation. So even Target, after watching Walmart today, they may still go down. The premiums are crazy, so be very careful with that. But that is one of the plays I'm going to be watching tomorrow. The number 2, Cisco. We grabbed plays on this about 2 weeks ago. It just showed up on the scanner. I thought they were weak on the daily. I said, you know, why not? Things were going up. They weren't really moving. The puts were kind of cheap, so I said, let's get it. So we're probably going to be in the money, or I think we're in the money right now on 5 contracts for June. We got the 4250s, but listen to what I just said here with the consumer stuff. This is going to add a drag here on the NASDAQ tomorrow, but Cisco, it may very well have a big continuation. I was surprised today. We even got to see Target. They just kept going lower, and I mean, what? They still closed down 28, 25%. So depending on what happens with Cisco and just given their guidance, I think that's going to be a bad one, but I really think we may get a follow-up on it, but we won't really force it. And then finally, I would be taking a look at Verizon and AT&T. So Verizon barely slipped. AT&T, they ended up being good, but if they could kind of get a safe haven bid, this one might be good. Other than that, there was nowhere to really look today. Again, oil, energy, I still like it, but they even got clapped. The consumer staples, the safe havens, they were not showing any rotational value today. So you got to be very choosy with your plays. If anything, maybe you could still get some of the volatility plays. So if you remember, we grabbed that VXX, and this was yesterday. I just got it because I thought it was broken, but these ones went 16 cents all the way up to 50. So you may see opportunities like this when it's moving, but pretty much just keep your eye out for that. We did an Ocean's 11 play. Small plays are still working. I think with some of these earnings, with time, if you catch one of the Grim Reapers, those will be good. And then following the post-earnings continuations. But that is pretty much it. We're going to have a lot of anticipation for tomorrow, the rest of the week. And just don't forget, if this week closes negative, it will now become like 6 or 7 weeks on the downside, but stay in the game, and there's a lot of opportunities, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining, and I need you to remember there's still a couple months left to go, and you gotta keep the stamina, so I hope you're ready. But I love you, Chad. I don't know. I feel like I'm looking at the camera right now, but I'm not, and it's like it's really weirding me out here, but the camera. But let's go, baby!